Hey, good morning, everyone. Welcome to Market Insider TV on a Tuesday morning. It is May the 7th. Brian Hoops with Midwest Market Solutions and our opening segment. I will be on RFD TV this morning, 10:15 Central Time. If you have a chance to check that out, certainly would appreciate it. Friday morning, I will be doing the TD Ameritrade Network. We'll be previewing the supply and demand report for the grains. That is out on Friday morning at 11 o'clock Central Time. Let's take a look at what's going on overnight and affecting our markets here news-wise. Corn did end a quarter lower, beans down about 2.5, and the wheat 4 to 5 lower overnight. U.S. dollar is higher, crude oil down about 65 points, and the stock market is seeing more losses this morning. Continue to hear concerns about U.S. and Chinese trade negotiations, and that is putting some pressure against the crude oil market, and will keep a lid on corn soybean rallies. In addition, weather forecasts are improving across the Corn Belt. Now, how that impacts grains? Well, it should allow for corn planting to pick up its pace a little bit here. We're going to see a wet week, and then by the weekend it starts to turn drier, and the 6 to 10 day is drier, and it's going to allow for some planting to be done through the end of the month. So U.S. corn planting did advance to 23% complete as of Sunday. That was down slightly from expectations and below last week's levels of 15%. It is also below last year, where we were at 36% complete, and the average pace. So if we don't get the crop planted by May the 31st, there's going to be a real concern about yield loss. In fact, as we get into the last 15 days of the month of May, we start to be a little concerned about 5% yield losses, nationwide. So there will be a lot of talk about that, a lot of concerns about it from talking with producers. Because soybeans have just dropped like a rock as far as price goes. There is still most of the producers I talk with want to plant corn through the end of May because of profitability. There's much more profitable to plant corn rather than soybeans at this time, so they're going to do everything they can, and that's the job of the market, was to not give an incentive for producers to plant more soybean acres, which is exactly what we don't need. And with the sharp drop in prices, we are likely to see the market producers respond by not planting as many soybeans as previously thought. So keep that in mind. For soybean prices, we could and probably will stabilize here. If we get the corn planters rolling, that will take some of the pressure away from that soybean market. Soybean planting is only 6% complete nationwide. It's up from last week, but down from last year, and the average pace of 14%. So not a major concern here for soybeans. I have talked with some producers who have indicated their desire to switch to oats seeding, maybe other small grains instead of corn or soybeans. They can get good yields for oats and very little expenses. So when times get a little bit tight here as far as money goes and cash flow, alternative crops that are sometimes forgotten about will get turned to. U.S. spring wheat planting 22% done. The average is 49, so similar to corn. We're way behind, but the forecast does look promising for the rest of this month. Winter wheat conditions are very high, 64% good to excellent. That's unchanged from last week. It's well above last year. The crop is now 29% headed. That's behind the 5-year average of 41%. We're below the $4 mark in July, Kansas City. I just have a hard time believing there's a lot of traders who want to sell wheat below $4. So even though we're trading below it, we may not see prices move sharply below that area. Forecasts, as I mentioned, very wet this week before turning drier into the end of the month. That will allow planting to get more of a normal pace. No private export sales. There's a few tenders out there with Japan and Jordan both tendering for some routine amounts of wheat. Weekly show list in the cattle estimated about 290,000 head. That's up from last week, but down from year-ago levels. Cash trade going to be on the defensive once again. The futures market is showing us a pattern here. It tries to rally early in the day, but the funds who are long in the cattle market are beating every rally that we have back down by the midday and the closing bell, where we're ending the day with losses. The hog market has expanded limits today and has called 25 to 50 lower in follow-through selling after locking limit down in yesterday's trade. All right, hope you have a great day of trade, and good luck on your trades. This